your credit risk rating is poor, and especially if you've been taking a beating lately due to non-payments or other problems, you can ask that your bank reduce their credit limits on your credit cards, credit lines, or even other debts. However, you should carefully consider this. For example, if you can pay off at least 50% of your debt loads as they're readjusted. So for example, if you have a credit limit of $5,000 on your credit card and you get it reduced to $2,500, you should make sure that you can at least leave a balance of $1,250 or less. Now, if you owe $4,000 and have no way of repaying it, then getting the credit limit reduced can actually hurt you. On the other hand, if you need to get a larger loan and you can use it to pay off the credit card in full and bring down the limit to around $2,500, then you may be able to improve your credit score in this way. The second thing you might want to consider is if you have lots of credit. If you have several types of debts and credit accounts, such as credit cards, store charge cards, and mortgage or a car loan or a personal line of credit, you may be looking like if you're overextending yourself on your credit, or at least this is what it looks like, right? Especially if each of these accounts are fairly large. You can't always close down your accounts, especially if you're still paying your debts over time. But reducing the limit may make you eligible for other loans should you need it. Another thing to consider is if you have some credit but you don't want to close your accounts entirely because you have not had credit for a very long time. Especially if you have several types of credit, it's not wise to close them even if you can, since lenders like to see long-term relationship with lenders. And reducing the limits can make the monthly payments more affordable and can actually give you a bigger credit boost than closing the long-standing accounts that actually matter over time. And last but not least, consider it if you're not going to be taking out a loan very soon. So in the short term, reducing your credit limits will actually lower your credit rating because your balances will make up a larger portion of a smaller credit. But in the long run, smaller charge accounts will actually boost your credit score by making repayments of loans easier and making them further from overextending your credit. So with that being said, guys, those are my tips for today. I hope you liked the information on this video. Make sure to like, comment, subscribe, share with family and friends, and until the next episode on Keeping It Real with Credit, peace.